I'm Daryl Jones, Director of Research at Hedgeye. I'm joined with Joe McMonigle, who's our Sector Head for Energy Policy Research. We're going to talk today about OPEC, the price of oil, and an interesting tweet that the President decided to release earlier this morning. But just to start off, you recently put up a note, Joe, talking about the JMMC. Can you tell us a little bit what this group is in terms of what it does for OPEC and the implications of the recent meeting?
Right, yeah, so the JMCC is the Joint Ministerial Monitoring Committee. It's a fancy name, but it's essentially a subcommittee of OPEC ministers that meet quarterly to basically review compliance under the agreement. And it was kind of used to try to keep pressure on participants in the oil deal to maintain their compliance quotas. Yeah. And it has, I think, worked. I think they've been able to keep pressure on. They know people are going to be called out if they're cheating, and so it has worked. But the new co-chairs as of this year of the JMMC are the Saudi oil minister and the Russian energy minister, and so they're two powerhouses in this deal, two major producers, and so now every JMMC meeting becomes like a mini OPEC meeting with lots of press attention, lots of headline risk, and also I'm sure, even though they're charged with just reviewing compliance, when you have these two key ministers together, they're probably talking about what might happen in the future, even though they're not announcing any moves right now.
Gotcha. And so they're feeling good about compliance, production levels, but a big part of that is actually what's happening in Venezuela.
That's right. There's two parts here, I think. One is yes, compliance is good, and so OPEC is kind of taking a little bit of a victory lap that their deal has worked because the global stockpiles have come down, or will come down probably next month, at least according to the IEA, into that 5-year range. And so they're feeling pretty good about that. So they're taking a bit of a victory lap, but we don't think they're going to put the brakes on in terms of production cuts. We see that continuing for the rest of this year. It's actually, I think they've achieved this goal really ahead of schedule too. And that's mainly due to Venezuela. And I joke in the note that OPEC should give its Man of the Year award to President Maduro, because Venezuela production has declined since 2016 by about 800,000 barrels a day. And their current production in March was 1.49 million barrels a day. Under the OPEC agreement, they're allowed to be producing at 1.975, so almost 2 million barrels a day. So they're basically, unplanned compliance is like 500%, with what they should be doing. And so it's allowed OPEC's job to be easier on compliance, but it's also, I think, accelerated the timeline of when OPEC thought it would get there. I think really most folks were thinking, the second half of 2018, probably the fall, is when we'd hit that 5-year range.
Gotcha.
But we're going to hit it next month. And that begs the question, if we're going to meet their goal, their stated goal of the deal, why would you continue cuts?
Right.
And that question was asked at the meeting in Saudi Arabia, and essentially OPEC, they want to continue the cuts because they want prices to go higher, and two, they're citing sort of demand, uncertainty about demand, and
Gotcha.
And things like that. So, but they probably won't discuss next steps on the cuts in earnest until the mid-June OPEC meeting.
Okay. So just going back to the price of oil,
yeah.
One thing kind of causing a bid to oil recently has been, excuse me, the rumors that Saudi Arabia is targeting $100 per barrel of oil. What do you make of those rumors? Is that realistic for the Saudis to want that? Why not? Might that be true?
Yeah. So Reuters came out with the story basically saying that, citing two unnamed sources in Saudi Arabia, saying
deep throat
that they were targeting $100 oil. Bloomberg had a similar article last week saying the target was $80. So I don't put much stock into the $100 target at all. I doubt that's the case. I don't think the Saudis even think that's in the cards. So that's hard for me to believe, and I suspect the Saudis will sort of publicly reject, that type of a price target. And $80, however, and I should add that the minister also last week beat back the Bloomberg story on $80. So obviously $100. They don't think that's the case either. I do think the $80 range is actually pretty realistic this year. And I'm going to talk more about that in notes in the coming days. But I think from a fundamental standpoint, the market is coming into balance, and we're starting to see drawdowns. We saw a drawdown this week in U.S. EIA crude stock data,
right.
And I think you're seeing it in the EIA monthly data. And so just from a fundamental standpoint, the market's tightening, and I think it could support prices in the $75 range.
Yep.
Then you add in all these geopolitical factors, Venezuela, Iran, Syria still lingering in the background, although there's really not physical oil supplies at risk there. You've got ongoing problems in Libya, Nigeria, and so you could easily get over $80 this year.
So just digging into the OPEC production cut deal, they're ahead of schedule. And the market's obviously very focused on what they're doing, what they're saying. To your point, reporters are now on this JMCC meeting. They're really attending it, looking for data points coming out of it. If you're somebody trading oil, what are the next catalysts in terms of this deal? Like, what are you looking for? What's baked into the market? And what should we be thinking about in terms of either a hawkish or more dovish data point in terms of the price of oil?
So we saw, I think, prices have been creeping up, I think, on fundamentals alone, but we really saw a little bit of a bump on the Syria missile strikes.
Okay.
But that quickly dissipated once I think the market realized it wasn't going to be an ongoing campaign, and it was probably a once-only deal. I'm not sure that the embers are completely out in Syria. I mean, I do think Assad is unpredictable. Iran very much is in a troublemaking mode there, as are the Russians. Israel is looking after their own interests there, and I think we could see, if the U.S. doesn't take military action, I think you could see continued Israeli military action. There's already been reports of, bombing runs on Iranian air bases in Syria. So that situation is not, I wouldn't take that off the table, and I think the market maybe has done that. And again, there's no physical oil supplies really of any meaningful amount to worry about there, but it's in the neighborhood of major oil producers, so it's something to be concerned about. The big two catalysts, though, that I think are important for the oil market is two areas where physical oil supplies are at risk. And one is Venezuela, we talked a little bit about, and the other is Iran. And so on May 12th, the president has to decide under U.S. law whether to waive oil sanctions against Iran. He has to do that every 120 days. He did it in January, but really begrudgingly and, sort of kicking and screaming, and was kind of promised that the EU would, consider, additional sanctions on Iran for ballistic missile testing, and that Congress would pass some tough new sanctions legislation literally days before the decision. And so they said, this stuff is in the works, we should continue with the oil waiver. Well, he did it. None of that stuff happened, of course.
Right.
Although the Europeans are now ramping up their activity ahead of the May 12th deadline. You have President Macron coming here next week to meet with it'll be the first state visit of any leader here in Washington. Angela Merkel is also coming. So you're going to see some pressure on the president from the Europeans. But in January, he basically said, look, this is the last chance. I'm not going to do this again unless changes are made. And really, nothing has really happened. I don't think Trump is going to, take, assurances that it's going to happen again like days before the decision. I think he's kind of seen that movie already and knows how it ends.
So it's a bit ironic given his tweet today, because when he, re-implements these Iranian sanctions, it's going to be hawkish for oil. It should drive the price up on some margin. But his tweet this morning really was complaining about OPEC, complaining about the high price of oil. What do you think is rationale behind, it's obviously hard to get into President Trump's head, but what was the rationale behind the tweet this morning?
So I think it's important to talk about the first part of your question
okay.
about the Iran and how much oil is at stake.
Yeah.
And so we put out notes, and we've been talking about the Iran deal for over a year now, and basically in January said that we felt the deal was going to end this year, either in January or May. And so it looks like it's going to happen in May. But essentially, Iran, since the sanctions were lifted, has added about another 1 million barrels a day in crude exports.
Okay.
And so we think all of that 1 million barrels a day is at risk. I mean, the EU part of that is probably about 500,000 barrels. So you could say that the range is, I think, at least 500,000 barrels. But I actually do think it's closer to 1 million barrels a day. The EU pushback is that the EU won't go along with the sanctions, so therefore that oil won't come off the market. But the EU governments themselves are not buying the oil. It's the European energy companies who have great economic exposure here in the U.S. So if they're faced with the decision of closing up shop in the U.S. in order to buy Iranian crude, I think that's an easy decision. And so a lot of people get sort of faked out by the EU's not going along, so therefore it's not going to have any impact. It will have an impact. It will essentially impose global oil sanctions again on Iran.
Yep.
And the only question is, what does China do? What does India do? What would because I think Asian countries like Japan and South Korea, they had sort of waivers under the old sanctions if they just reduced their imports. And so they were allowed to keep taking it, but they had to significantly reduce imports. I don't see any waivers for companies or for countries under Trump and John Bolton, the new national security advisor, and Mike Pompeo will be confirmed hopefully as Secretary of State. They're aligned with Trump on this policy, and they're going to be implementing the policy. So I think it's going to be a much more stricter implementation of the sanctions that might have been under McMaster or Tillerson. So I do think it's going to be closer to the 1 million barrels a day, and that's going to be, even if it doesn't happen right away, I think the market's going to be anticipating that. And I think you're already seeing some of that starting to get factored into prices now.
Yep.
If you look at options in May and later in the summer, you're seeing.
So you have a very tight oil market to begin with. These sanctions get implemented. That takes another 1 million in production off the market. That's at a minimum going to keep prices high, if not drive them higher. And then we have President Trump, on the other hand, saying prices are too high this morning.
That's right. And so a lot of people are saying, well, yes, but this catalyst is the Iran oil sanctions, and we had I've already seen stories today talking about, well, if Trump doesn't want oil prices to go up, he shouldn't impose the oil sanctions. He shouldn't be talking about sanctions on Venezuela. But I think that's sort of missing the point. I mean, in terms of what's behind the Trump tweet. Some of it may have to do with gasoline prices, which have been creeping up. They're up about 30 cents from a year ago. But there really has not been that much coverage of higher gasoline prices yet. I mean, we could see it this summer as we enter the summer driving season. But, oil prices and gasoline prices in the U.S. have been relatively low over the last couple of years. So I'm not sure that's a hot button issue yet in voter land. So I'm not sure Trump is really focusing on that. Instead, I think he is kind of positioning, doing some positioning ahead of this Iran oil sanctions decision. So, number one, I think the market should take it as another indication that it's going to happen. And number two, I think he's trying to get ahead of the blame game on who's responsible for higher oil prices. Right. And I think he's going to be pointing the finger at OPEC because of this agreement. And in addition to that, because he doesn't want to take the blame for it, but in addition to that, I think he's going to, the implications of it are going to be, I think pressure by Trump on OPEC and Gulf producers in particular who are aligned with him on this Iran policy to increase production because of the disruption. And so that's something that I think was completely unforeseen until the Trump tweet. And so OPEC and these Gulf producers are going to have to be dealing with this, and we may be dealing with it at the June OPEC meeting, which will make for another exciting couple days in Vienna.
Right. So what can President Trump do if he wants to try to reduce the price of oil? Like as a president, as somebody that implements policy, what functionally can he do?
Yeah, so as you know, my former job in government, I was the chief of staff at the Energy Department.
Right.
And, prices were much lower then, but, when they spiked a little bit, everybody turned to us, what are you going to do about it? There really are no tools available to the federal government. There's no button to push at the Department of Energy to impact oil prices.
I guess could you release stockpiles?
Yeah, so that's one option, and that's generally done only when there's a disruption in physical supplies. Yeah. Although Congress and the administration has been basically raiding the SPRO, the Strategic Petroleum Reserve, and selling it in order to pay for parts of the budget.
Right.
So we're already down several 100,000 barrels just because we've been using it to make math work on the budget, which I was opposed to and I think is a wrong-headed move. But yes, you could see a SPRO is really the only tool in the toolbox. Other than that, I mean, Trump does now have this tool of Twitter, which we saw today. He put this tweet out that said prices were artificially high and that it's unacceptable. And so prices, cratered by 50 cents, just on the tweet alone. Dramatic decline on the charts. So I think you're going to see public pressure from him on producers, and so I think that's probably going to be the first tool that he will be using going forward. Now, he also has some leverage in other policy areas as well that are important to different countries in the region. So he could apply pressure in order to get them to do what they want to do. But when I was at the Department of Energy, we would basically go to OPEC producers before each meeting and say, please increase production so we can keep prices down.
Yeah.
The U.S. today is now a big oil producer and needs higher prices for investment. We saw what happened post 2014 when OPEC decided to take the lid off production and job losses and everything else.
Right.
With the return of higher prices, it's generated a lot of economic activity and also job creation in Trump-red states. So I suspect the president is hearing from people like Harold Hamm from Continental, who's a key advisor of his on energy issues, and other friends of his in the oil and gas sector, that it might not be such a bad thing for prices to be as high as they are.
Yeah, but could he put pressure on the Saudis to the extent that he really felt that oil gets to $90? Like, what can he do almost diplomatically with the Saudis as an example too?
Well, I think we could expect that he will be asking them to increase production. And to make up for
Venezuela's fall off.
I mean, the important thing to realize, you referenced this, as the market is coming more and more into balance, there really isn't a lot of spare capacity anymore to deal with these geopolitical risks. So a year ago, and there was some geopolitical fire somewhere, the market kind of yawned. But now that we're sort of at a very slim margin, there could be massive reactions, giant reactions to geopolitical events, especially in the case of Iran. But even Saudi Arabia, I'm not sure. You got 1 million barrels a day from Iran, and Venezuela. We didn't really talk about sanctions that I think are really on the table yet in Venezuela. But even if there are no sanctions in Venezuela, I think you're going to see production month on month has gone down about 50,000 barrels a month. So you could see another 500,000 barrels come off the market in Venezuela alone without any kind of sanctions. And so, we also just saw 3 Chevron executives arrested in Venezuela this past week. The thinking had been that there's sort of a minimum level of production because there's all these Western oil companies involved in the production of these fields, and it's not PDVSA only. And so, there's a minimum level of where production would stay, and that's generally thought to be about 1 million barrels a day. But if you're arresting oil executives from these Western countries, that may no longer be the case too. So I'm not even sure OPEC and Saudi Arabia alone can, be the swing producer to match some of these physical disruptions.
So it seems like no matter how you slice it, OPEC keeping the lid on production, Venezuelan production declining 50,000 barrels a day, Iran, potentially sanctions being re-implemented there. And we're heading into the summer driving season where demand's going to pick up. Two things. Number one, supply demand's probably going to get tighter. The second thing is it's going to become increasingly a hot button political issue in the U.S., right? Especially going into the midterms. And you'll probably see more rhetoric out of the president, I would think, right?
I would think so, especially if gasoline prices start spiking. I mean, I don't really think that's what precipitated this tweet from him. But it could keep the tweets coming if gasoline prices get higher and it is a hot button issue. And he's very good at these populist campaigns and getting involved in hot button stories of the day. So I think it should be expected that if that happens, he will be doing that.
Great. All right. Thanks a lot, Joe. There's certainly going to be a lot to watch in the coming weeks and months in the oil market, and appreciate Joe taking the time today. Thanks.